What's going on, Monopoly family? Welcome back to the channel. Today, guys, I want to go through a little recap on the last two trades made. Now, I haven't made a video like this where we get to sit down on this channel and talk about what went right and what could have went wrong on these trades. So maybe this could be our new thing on this channel. So if you enjoy this, guys, and get value, smashy, show the boys some love. You know, when I trade nowadays, I don't trade alone. I always trade with the Discord chat. That's my private stock group that follow my trading strategy that I've been teaching you on this channel, with plenty of tutorials, by the way, but that's just the basic to put your foot through the door. Now, we made two trades, one on Thursday and one on Friday. That's usually what we do. We make one trade on one stock, and that lasts usually 5 to 10 minutes or 15 minutes a day when the New York Stock Exchange opens. And basically the last 2 days, guys, combined, we came out with almost $50,000 give and take, 25 here and 25 there. And I'll leave some results here for you guys to see. Hopefully that will inspire you and motivate you. I know when I see people doing well, it actually uplifts me and inspires me rather than makes me jealous. But yeah, that was two trades made on Thursday and Friday, and it was a success for many people, based on the same pattern, on the same behavior that they predicted will happen before even the stock market opened. How do they know that? Well, obviously I gave them the patterns and I explained to them the criteria that have to be met for that pattern to form. And I'm proud of them for actually, well, obviously I'm not going to take it from them and say I was there, told them exactly what's about to happen, although I did, right? But they already know exactly what's about to happen. For one simple reason, they've witnessed this before in many trades. It wasn't an accident that they came out profitable that day. So give yourself a round of applause, guys, for that trade and for Friday's trade. Matter of fact, for Uber's trade also, because Uber killed it as well on both trades, on Tuesday and Wednesday. And that's because we didn't use any indicators. We actually used psychology behind our trades. Because at the end of the day, psychology and price action is what matters. Alright? And I'll explain what that means. But let's just go right into these two trades and analyze them before we get to talk and piss some people off. So Expedia, guys, Expedia Group basically dropped by 27% on market open for one simple reason. It came out with the report, and the report said to investors, you better take your money away because we're not growing. And that's exactly what they did. Well, they didn't actually say it like that, but from analyzing the report, and that's why you have to become a good analyst, it kind of gave hints that this stock isn't growing, and the only reason why an investor and money flows into a stock in the first place is because this stock is growing financially. And if it tells them in the report it's not, obviously it just collapses. And I think you can see that in the trend and in the price movement. Now, that stock just full on collapsed on the day because money was just flowing from that stock outwards for the whole day. And we caught 1 to 2, 3%. We didn't know it was going to continue downwards because we can never know unless we use a trailing stop loss. But the calculated profit is usually 1 to 2% a day. And that's good enough for us on a high cap stock. So that's Expedia. That was a success. And on that day, guys, you can see the guys actually done well with their profits. Some made a day's salary with that trade. Some made their month's salary with that trade. I know I done well personally. But psychology was very important in this trade. And in any other trade, we understand how the investor is going to react. So we don't think from the point of view of a trader, we think from the point of view of an investor. And yeah, that's Expedia. And let's move on to GPS, which is Gap. That was a Friday trade. Gap, guys, also collapsed in value, i.e. it just continued dropping. By the way, you're going to ask, how do you make money when the stock is going down in value? Well, it's called shorting. There's two ways to profit from the stock market. One, buy cheap, sell high. Number two, sell high, buy cheap, and that's shorting. Basically, we bet that the stock is dropping in value. That's how we profit. So Gap, guys, was the same pattern. However, that pattern has two outcomes. That pattern is called pattern 4. And you can see, guys, it did have a little pullback. And that's where price action comes into play. But when we understand the psychology and build up our confidence behind our decision, even if the stock pulls back, you already gave that 2% risk management. So here, what you're saying is, even if we gave it 2% risk management and it goes 1% against us, there's still another percentage left where there's room for it to breathe. And yeah, let's see how much it moved by. Well, it just moved by a percentage on market open. So if you gave it 2% risk management and waited, you would have still made the 1.51 profit. So that was a good trade also. And now let's talk about why this stock dropped. Same reason. It told investors, we're not growing, you better take your money away. And how do we know this? Because we analyzed the report. And when we understand the psychology behind how swing traders and investors, how they're going to react and their way of thinking towards a specific investment, you'll understand on the day you have to be short biased on that trade. Okay? So that trade was a success with 1% or 7% down. Obviously, we couldn't take the whole 7%, so we usually take 1 to 2%. And here's the guys that got to kill it on that trade also. And by the way, they understand everything that I'm saying here because that's what's in the course. And that's where I get to plug my course on my Discord chat. If you want to get it, it comes with the Discord chat. It's exclusive for the guys that have the course. So that's it, the course out the way. Let's just talk about what could have went wrong here. Well, like I said, it could have just spiked in value while we were in the short position. But again, we have 2% risk management. 2% is what I'm willing to take from that stock, a loss if it does go against me. That means if my pattern is 80%, which is what it is, 80% success rate. What are my patterns? There's 4 patterns with these plays, and every report matches a specific pattern, a behavior. If those patterns, right, come out with 80% success rate, then that means 20% I can come out with a loss. So I have to protect, there's no chance I have to protect my backside because it's not 100% accurate. 80% is in my favor. So if I take a loss of 2%, I can come back tomorrow. The market said to me, there's a bigger chance of you recovering your money. 80% of the time you can recover your money the next day. All right? So that gives me an edge even when I lose. So that's why it's important to take your loss. It doesn't make you a bad person. It makes you a good trader, a consistent one on the road to consistency. And I think many of you guys watching on the Discord chat this week, you've done really well. And you actually shared it with me, and I got to share it on Instagram to parade you guys. Many people got to kill it 5 out of 5 days, right? 5 trades in the week. And many people are finding consistency now because they understand the psychology, the fundamentals, analysis, the patterns, the behaviors, even the price action. And that's the last thing, is price action. That's when you go in on the day and you look at the prices movement. And those prices give you indication of where the stock is headed. And with practice, with the right knowledge, I think many people can understand it. So those 2 trades netted us 50,000 on the last in 2 days for the whole chat, and that was a great trade, guys. So I'm proud of everybody that got to do well, even if you're not part of the Discord chat and you made those trades in the first place. Yeah, that's all I want to say. That was a good recap, I think, on my behalf. I'm a little tired, so obviously I can't go into more details, guys. But if you enjoy this and you want more, maybe next time we'll go into deep details. But again, my trading isn't to do with graphs and technicals, so there's no ugly things on my screen that you want to see, matter of fact, you get bored from that. But psychology is very important, and I know it seems like it's too good to be true, but there is few things that need to go into place in order to find consistency. And that's something I haven't shared on YouTube altogether. So, gotta go, guys. Appreciate you for watching. Peace and love. Smash that like button if you made it this far. Follow me on Instagram if you haven't already, because I do share my trades or the results of the chat room over there. Hopefully that motivated you. Hopefully you learned a thing or two. Keep learning, keep studying, keep practicing. The more you practice, the more success you see, because the stock market is just like anything else. The more you do it, the more you find, I guess, success in that specific thing. So keep doing your thing, and I appreciate you for watching, guys. Peace and love.